Hi, today I just wanted to share about one of my stocks that actually popped 16% in a day after Donald Trump announced its reciprocal tariffs. And let's take a look if there's actually a strong case for further upside for this stock. So the stock that I actually bought is LoanDepot. So LoanDepot is a residential mortgage company in the US and they provide mortgage loans to property buyers. So as we all know, on April 2nd, Donald Trump actually announced his reciprocal tariffs and the whole market went into the red. As you can see here, almost every single stock went into the red in that few days. When Trump announced the tariffs, the market feared recession. As you can see from here, the Treasury yield actually sinks further as recession risk rises. And because of the fear of a recession, the US 10-year Treasury yield dropped below 4% for the first time since Donald Trump won. And this is very beneficial for the residential mortgage companies. As you can see from here, on April 4th, the US 10-year Treasury yield fell to 3.96%, and previously it was between 4 to 5%. So why did LoanDepot stock jump? This is because with a lower 10-year Treasury yield, the mortgage rate actually reduces, and this indirectly benefits LoanDepot's business. LoanDepot has three main businesses. The first one is they provide mortgage loans to property owners. When you want to buy a house, you can actually get a mortgage loan from LoanDepot and they will make money from it. If you need money during a recession, you can do a home equity loan whereby you can get cash via home equity loans on the property that you are currently staying in. And lastly, if the interest rate were to come down, many homeowners will definitely do a refinancing so that on a monthly basis you will be paying way less interest to the banks. The 10-year Treasury yield did come down in that few days. Basically, if you were to look at this from a weekly basis, on the week ending April 9th, the mortgage application jumped 20% for that week compared to the previous week. And for the previous week, the mortgage application was minus 1.6%. They themselves also did mention that in last year, 2024, in September, there was a temporary decrease in market rates. And this actually increased the pickup in the lock activities. So they themselves did also experience this last September when the rate went down. If you believe that the 10-year Treasury yield at this current rate is not sustainable and is coming down, this will definitely make a strong case where LoanDepot will benefit from the increase in applications. So to take advantage of the situation, LoanDepot invested in loan officers. So this is what they are doing and they have already prepared for it. But with all business, there is always a different type of pitfalls. For example, for the residential mortgage companies, they do have an issue whereby if the interest rate were to come down, their current mortgage servicing rights will go down. In simple terms, let's say if a loan were to make to a property owner, LoanDepot will have the mortgage servicing rights. That means if you are a LoanDepot, you get to collect the money from the property owner and you get paid for it. So you are basically like a loan shark. You provide the service of collecting the money back. But when interest rate were to come down, people tend to refinance. So to refinance, you need to pay off the existing loan. So if the owner were to pay off the existing loan, they already paid the money back. So there's no need for you to collect money from the property owners anymore. So this will actually cause the so-called collection fees to come down, which affects the mortgage servicing rights. This is actually a common issue for residential mortgage companies. But for loan depot, what happens is that they actually hedged this issue. So even if there's a reduce in interest rate, they will not be that much impacted by the decrease in the value of their mortgage servicing rights. But of course, for every investor, what's the thing that is most worrying during recession? Foreclosure, right? There's a risk of default. So, for example, if the property owner stop paying up the loan, isn't there like a default risk during the '08 crisis, whereby a lot of the properties are put on foreclosure? Basically, for residential mortgage companies, you do not need to worry about this because LoanDepot originates the loans using a warehouse lending model. They will actually sell it off to institutions like Fannie Mae. So the credit risk is transferred. So even if there's a default, LoanDepot do not need to face this credit risk. The only issue that they might be facing is that there might be an increase in the collection process because you need to get the person to pay up. So you need to do more actions to get them to pay back the mortgage payments. So maybe they will have to hang like hate pigs in front of the houses to scare the people into paying. I mean, I don't know how it's going to cost, but definitely there will be higher costs if the people delays or do not want to make their mortgage payments. So this is definitely a big opportunity. But why is the stock still low? I think for the past few quarters, interest rate has been rising and mortgage activities have decreased. So for the past few quarters, LoanDepot did see negative net flow. However, this do create an opportunity. If the rates drop in the future, net income can flip positively very quickly and the stock could spike dramatically. So I do think that there's a hidden play on falling interest rate. If you do believe that the rate cycles will reverse soon, this might be a very good hedge as well. So it does have a strong setup for outsized gains, but definitely you still need to do your own due diligence. So if you're interested in more investment videos like this, I'll be covering a few other residential mortgage companies as well. So you can subscribe or like this video, and I'll see you in my next video.